Let's put your picture up. I was waiting for that.
Hopefully not.
So, it's 4 p.m. We are in between an audience that's looking quite tired and some drinks. I think, Anil, tell us what you do.
So, I, 17 years ago, started working for this company called Yodlee. And I'm a problem solution type of guy. Oh, there we go. I think I look a lot younger there. And we did a survey of what are the biggest problems that each one of you individually, consumers, face in your lives. We did this 17 years ago, we did it 15 years ago, 10 years ago, and we do it today. And the same three problems rise to the top. By the way, this is globally true. And the top three are, number one is, the vast majority of consumers do not know how to manage their financial lives. It stresses them out, they're overwhelmed, freaks them out. The second is health. We just heard about the other problem. And the third is education. So, to me, that was an interesting fact. Why is it that managing a financial life is such a stressful and overwhelming experience for so many of us, 70 to 80% of all of us in the room? And part of it is that it's very fragmented. We each, as consumers, have multiple accounts. So our financial lives typically start when we get out of college, and at that point, maybe it's a simple financial life. You've got a checking account, and then you get 5 or 6 credit cards, you get an auto loan, you get a mortgage, you start investing, you get a 401k account. The average consumer in this room has about 15 accounts, and you have that across 7 institutions. And by the way, when you think about your financial life, you're not just making one decision. Depending on where we are in our life journey, we are making dozens and dozens of decisions. In fact, there's about 200 financial decisions we make in our lives. Some are daily, how much cash do I have? Or some are monthly, when do I need to pay my bills? Some of them are once a quarter, I need to do my investment planning. Some of them are once a year, I got to pay my taxes. So it's a very complicated set of information and decisions that we have. And what we started at Yodlee was, how do we address this problem with technology? And we followed really 3 phases to solve the problem. The first is, you got to connect all the information. And that turned out to be a lot harder than we had anticipated. There's over 15,000 financial institutions just in the United States. Once you connect all of that, then you got to figure out, so what does all this data really mean? So we started building a bunch of digital solutions on top of that. Where am I spending my money? What categories? How much cash do I have across all my accounts? How much money do I need for retirement, and so on and so forth? But today, if you fast forward, where we are, 17 years later, is we have 22 million active users of our service through, it's a B2B2C model. Multiple accounts, 5 to 10 accounts for each consumer, every transaction, every day. Plus, with InvestNet, which acquired us, 52,000 advisors, every account, every transaction. So we have gobs and gobs of data.
And we use it?
That's what we're doing right now.
So, quick question for you. You know, the whole idea of wealth advisors not being available for people without enough to sort of cover the cost of these advisors. Second question, are they really smart? They're just a job, and they're just doing their job and giving you advice that they're paid to give you. What's the evolution of that industry? How do you think of the world of artificial intelligence leading that world, and this quote-unquote term robo-advisors? Like, give us some clarity on where that industry is and how smart is it?
So, in my opinion, wealth management, which is one of the pillars of our financial life, you've got kind of personal financial management, you've got your credit life, you've got then your investment life, and wealth management, which is part of that, is one of the most broken processes that we have. We've got a few 100,000 financial advisors in the United States. Average age is about 60 years old. Most of them are not technologically savvy. And what they've really been focused on is selling products and making a lot of commissions, and there is no fiduciary standard in the United States, which means if any of you, which is most of you in the room, use advisors, they have no responsibility to look out for your best interests. Doesn't exist. Astonishing fact.
I think I will stop you 1 second. There's 3 gentlemen sitting in the back who built Franklin Templeton.
Yeah.
They're all laughing and smiling over it. You guys should laugh. I can see you over here.
So I think that this is a segment that is obviously ripe for transformation. And it's ripe for transformation because not only the products, but if you talk to millennials today as one data point, there was a study done recently, 73% of millennials when asked, who do you want handling your financial affairs? Your bank, your brokerage, is it Wells or Bank of America or Fidelity? 73% of them said no. I would prefer it to be Facebook or Amazon or Google or Apple. So you've got this millennial generation which has no ties to the traditional way of thinking. And what's therefore happening is a lot of this stuff is now getting automated because you can deliver advice less expensively. And just as the prior speaker said, you can personalize it. But having said that, one of the most important things we've learned about financial services is money is emotional. It's not just a product. And so no matter how smart we get with technology or AI or machine learning, it will always be a case of man plus machine. Because there is this emotional factor to money. And you can get all these tools and you can get all this predictive analytics and personalized recommendations and all of that good stuff, but at the end of the day, you have to trust somebody. And that's what's fascinating.
I mean, there's a wide area we need to cover when it comes to using technology and then AI on top of that in, let's say, financial services broadly. But you think of the millennial generation starting to earn more and needing this rather than just a checking account or something. What I've heard is they don't want to talk to someone. They just want, there's going to be a reduction in physical contact between the person who's using a consumer service and a person who's consuming it. So mostly driven by smartphones, mostly driven by applications, retail banking or the branch office is disappearing. You go outside of this country, that's already happening at a much faster pace. How do you see that man-machine thing matching that new generation that doesn't really want man involved?
I think that there are 2 conditions under which you could be, 100% machine. One is, how complex is the decision? If I'm talking about my investments, it's unlikely I'm going to go, the majority of the population is going to go just to machines. Because not only is it what are the best returns and what am I asked, what products exist, but there's the other component, the human factor, which is what are my aspirations, what are my goals, what are my fears, and it's really difficult for machines to understand that.
You give them a UI with 5 little bars and they can play with risk reward and you can get some advice on that. And I say most of the population doesn't need very complicated advice. I'd say this is definitely not for the higher end, which is high touch. Have you seen the sort of growth of robo-advisor / AI-driven decision-making change over the last 4 or 5 years? And how do you see that progressing in the next 5 years?
Actually, so your questions are connected. Because if you look at the robo world, they all started as 100% robo. And now more and more of them are going to a hybrid system.
Right.
And I think what they realized is that you can get the first few. Maybe they're super tech savvy, it's not demographic, it's psychographic. You can get the first few, but then to really get to critical mass, you do need that combination. And to your point, we're looking at a complex decisioning system, which is my investments, my retirement. But if you go to simpler things, like how much cash do I have, or where am I spending the money, those could be, exactly, those could be 100% digitized.
So, we sit here in Silicon Valley and we sit, especially within the higher end, we dream up these fancy things we can do with these technologies, which actually are not new, they're 30-year-old systems. How have you seen adoption curves within the financial services space? mean, you started out with just connecting pipes, right? And that itself, 15 years ago, was kind of amazing that you could actually do that. How's that progression been? Have you seen it changing? What's exciting? What's happening in your business?
I think there's definitely been a tipping point. If we look at our adoption at Yodlee, it was, some growth, but low levels of growth for the first few years. And then due to a combination of factors, some of them technology, some of them more and more people getting comfortable with the internet, some of them related around regulations and security and privacy, we hit a tipping point. I remember we were one of the first 1 or 2 or 3 fintech companies, as they call them. And today there's, according to McKinsey, there's over 4,000. So there's been this kind of, tipping point where everything accelerated. Our own adoption, starting 2 or 3 years ago, also hit an inflection point. And the reason for that is, initially we were taking all this data, and all we were doing is reporting. Here's what you have. And that's kind of limited value. Okay, so I'm interested to know what I have. Now we've taken it a step further and said, okay, based on this data, how can we make your life simpler, easier, better, faster, whatever the case might be, cheaper? So you have online lending, which is starting to provide lower interest rates to the underbanked or the unbanked. You've got the robos who are saying, I don't have the time. I want to do investments and wealth planning. I don't have the time.
At a price I don't mind paying.
Or credit. One of the most broken processes in the system today is the credit system. I'll give you one simple example. You could have $10 million of cash in your bank and be super wealthy, and you could go to Europe on vacation and be late paying your bills, and your credit score will take a massive hit. What kind of system is that? I mean, it's extremely imperfect. And so I think technology and analytics and AI in particular can have an amazing impact on some of these underlying problems. How do we give better credit?
Any kind of, I'd say, intelligence around weak signals, which is what we're talking about, can have major benefit from using these techniques or the technologies. Let's talk about fraud, crime prevention, all that sort of one area. Then the other is which you kind of touched upon, which is underwriting risk, which is another area where both of these can use a lot of the data that you have sitting in your repositories or your partners. And the second component of that would be, how much of this are you allowed to use, and whose data is it?
Yeah. So I'll start with the last question first, because I feel very strongly about that. I think you have in this ecosystem multiple stakeholders. You have financial institutions, you have the regulators, you have fintech companies, you have the consumer. There is no doubt in my mind that the consumer is the one who owns the data. This is your data. It's not my data, it's not the bank's data, it's not anybody else's data. That has to be the central proposition for this industry, I think, to get to the next level. Now, not everyone agrees with me. The financial institutions sit there and say, well, maybe this is our data.
But they definitely don't agree with you in China.
That's right.
Or in India, for that matter.
Yes and no. I think they provide access. If you look at Asia, I'm actually astounded that, you look at Singapore. The Monetary Authority of Singapore recently passed a set of standards and regulations that has it leapfrogging what we have in the US. Open APIs, open access to data. Same thing in Europe with PSD2. The US is actually lagging right now. And most of these applications don't work without this access to data. So I think it's paramount that we as an industry come to some kind of common understanding that it's a consumer permissioning. 100% of what we do is consumer permission. And then the analytics we do fall into 2 flavors. If it's about the consumer, much like the example you saw with Google and the health example, if it's about the consumer and it's about personalized information and apps for that consumer, you can obviously use PII.
You can tailor that information.
Right. But if you're looking at broader data around trends, so you're trying to build credit models, then you can have no PII in that data. And that's a very important pillar as well around privacy. Security is another fascinating area because we all know we have a somewhat broken system with security with passwords today. They don't really work. There are technologies to get to the next level. The bigger issue is not passwords, and what we find is it's not the banks are actually one of the most vulnerable areas because most of them have technology that has been, glued together through multiple acquisitions over 30 or 40 years, and they're sitting on really old technology. And so we have a vulnerable system. Many times, the regulators will say, wait a minute, some of these new fintech companies or analytic companies, do you have the same security? The fact of the matter is, most of the new technology companies are riding on much more modern platforms with much higher levels.
Have you been hacked yet?
Nope, we have not.
We just don't know.
Or we don't know.
But thank you for that information. We actually have a few of those kind of companies in the Hive. We touched a little about these alternative lending companies in the last sort of 5-7 years. We've seen an explosion of that, partly because the banks left taking risk business. Some people. How do you see that progressing? Where do you see the role of the kinds of things we've been talking about today in that space? And do you think that will have a sort of fill the hole the banks left out? Do you think the banks are starting to call back? Where's that ecosystem? How do you see that evolving?
Yeah, there's classic, action-reaction stuff going on in an iterative process. Yes, the banks, after the financial crisis, walked away from that business. It was too risky. That created a void. That created an opportunity for all these new age players to come in and say, we can use data, we can do better risk
Did they
management.
do better decision making?
They did. There's actually use case after use case. If you look at a company like, it worked.
The theory worked.
It did. You take a company like Cabbage, which does small business loans, and what they were able to do in terms of credit analytics using data was far superior to what has traditionally been done with FICO scores and the like. But now they've created a significant enough business that the banks are sitting there and saying, wait a minute, maybe we should participate in this as well. So there's classic co-opetition going on right now, and in the end, guess who wins? The consumer. They're getting better products, they're getting more timely products, they're getting better rates, they're getting more competitive products, they're getting lower fees. And going back to your example on wealth management, fees have been declining year after year after year after year. It used to be 2.5% and 1.5 now, it's probably in the low ones for financial advisors. That's a good thing for all of us.
Another question for you. I don't know how much visibility you have into this, but you've got all this data from banks and financial services companies, and then you have a country like China that just launches something on a messaging app, and it takes off like nothing else on earth. How do you think of that? And when you guys sit around your boardroom and talk about what's going on over there, how do we in this audience think of that? What should we think of that?
Well, look, the most successful fintech company on the planet is Alipay, obviously, and now not only are they started off with payments, but then they got into the regular savings account, deposit products, insurance products. They actually bought a wealth management company. And it is their goal, their stated goal, to go global with this platform that can use data, all the data they have on the consumers.
Messaging data is amazing.
Exactly, to offer products, better, cheaper, faster. So, this company came out of China, and I think that the model there, the lesson for me was that you have certain advantages there if you get the right support to get through that growth curve faster.
So I was going to ask you, are we being held back here because of legacy or regulations? Which are they two connected?
Oh, I don't know. But what's your view on that?
I'm not that smart. I'm the one asking questions.
I think it's a mixed bag, right? It's a mixed bag of both.
I just, when we do business in other parts of the world, you realize cultures are different. People consume things differently because they've never had what we've had here, which is you've never had the local sort of financial services. They've had similar to credit unions, but nothing more sophisticated. So these things are unmet demands that they're met in certain ways that leapfrog the US. When you think about your role today and the asset that you're sitting on top of and all of these new things coming at you, how do you decide to prioritize what to do, what to experiment with, what do you want to launch as a real product? And where does this world of artificial intelligence fit in?
Yeah, again, I'll start with the second part. The most important trend that we're seeing is, I grew up in the PC world. I was chief marketing officer at Gateway 20 years ago, and it was all about speeds and feeds and bits and bytes. And then it became about software and digital solutions. And I think, in my humble opinion, we're coming to the end of the software era. I think it's now about the data. What does the data really say? What intelligence does it bring? And that's what we are prioritizing. We are prioritizing how do you create value through the data that exists, because in financial services, it's a data business.
Yeah.
There's no physical product.
I just realized we are running out of time. Are there any questions from the audience? Yes.
So thanks so much for sharing the very good insights. Do you envision a future where smaller players cannot compete against bigger ones because they no longer can afford to protect the data that their customers are trusting them with?
Or said another way, scale becomes less important.
More important these days.
Well,
These things more important.
I thought you said, can smaller players compete with big players?
Well, my point is that as data is more and more expensive to protect, only bigger players can spend the money needed to keep the data safe. Or not, this is just asking you what.
My belief is, and this may be counterintuitive, I actually don't think that you need to be big to play in this space, which is why you have such incredible innovation with fintech happening across the globe.
I think data, just to add to that, I think data is sort of, not today, but at some point going to become a utility and be available to people in some fashion to be able to compete, which is what is happening in Asia and in Europe as well. Any other questions? Yes, please.
Thank you. A few minutes ago, we heard Verizon SVP telling us going to catch up with the China Mobile by putting up an Apple Store and compete with Apple and Google. Are you in position to do something for financial applications? Are you planning it?
Yeah, so we had a vision that was exactly that. If you have 200 financial decisions, in the ideal world, you would have an app store with 200 financial applications. The problem that we have is that we work through banks, and so selling that idea of an app store to a bank is a very, very difficult concept. Somebody like Verizon will figure that out, and they will put an app store and they will have a set of financial apps that will bypass financial institutions, and that's when that will become real. How's that for partnership idea?
I think we're around for the rest of the evening for you to ask us questions, but thank you so much.